Hello, everyone, and welcome back to the channel. Today, we have a very, very special guest here. This is Daniel. He is the owner and founder of Bookkeeping for Painters. So today, we are going to talk about not only, just kind of how to grow and how to scale your painting company, but how to actually take all those numbers in your head, those numbers that you're calculating, put them down on paper so that you can actually figure out how much you're actually making and what you can do to make even more. So Daniel, welcome. It is a pleasure to have you on the show here today.
Thanks, Caleb. I'm excited to be here.
I think Daniel has an extremely unique perspective, and I think that he's super valuable because he gets to see the inside of hundreds of different painting businesses, what they're spending their money on, what they're doing with their money once they make it, how much they're making in sales, where that sales, where those leads are coming from for those sales. I think that, getting that insider perspective is of just, hundreds of different painters is so valuable because he can see, hey, what's profitable for people, what's not, where are they spending most of their money? And also too, a little bit about like what they're doing with their money once they get it. Are they, investing in a retirement account? Are they buying rental properties? What's going on after the fact there? Uh, I personally think that's valuable. What do you kind of think about that, Daniel?
Yeah, it is super valuable to be able to know where you stand amongst other painting businesses, so you can know, are you doing well? Are you doing okay? Are you doing below average? And be able to not only see where you stand, but see a roadmap to how to get better. Like what strategies can you employ in your own business to make more money, save more time, cut your taxes.
So all of the, most of the people that you see, maybe that come to your firm for the first time, or people that you talk to or meet or anything in the industry, where do you notice that most people seem to be at, like bookkeeping wise? Like, do they just ignore it and then, cram it all together on an Excel sheet once taxes come? Do they, write a lot of things off under the table? Like, are they super diligent on their books and they, meet with you every month to get to make them better? Where's everybody at?
Yeah, great question. So when folks first talk to me or someone on my team, they are usually they see the value in bookkeeping at that point. So usually when folks first start out in their business, they are more focused on running their business. They're wearing all the hats. There's a lot to do to start your business. And usually bookkeeping is probably one of the last things they're thinking about, or even taxes, one of the last things they're thinking about. But once, and that's not everybody, but a lot of folks. But once they kind of go through a tax season or two, they start to realize, oh, I got to pay attention to this. I need to, make sure my finances are in order for tax season. But also, I don't even know how I did this past year. I have a guess. I can look at my CRM and say, okay, I sold this much in work, and I can look at my bank account and say, okay, this is how much I have in my bank account. But I don't really know my margins on what was my gross profit margin or my net profit margin.
Yeah.
So when folks start experiencing that, like after year one or two, then I think they start reaching out for help, and then and trying to understand their numbers in a more deep and meaningful way, so they can make those key decisions to get to the next level.
Okay. Um, so what are kind of those key decisions to make it to the next level?
Right. So when someone first signs up, we do a review, put their financials together. First of all, usually if they haven't done it, like do their bookkeeping, take a look at their financial picture. So that's their profit and loss, their balance sheet, their statement of cash flows. And usually the thing that is lacking is the gross profit. And just to make sure everyone is on the same page with what that means, gross profit is basically your revenue. So your top line, what you received in money from customers, minus the cost to produce the job. So this is to pay your painters and your materials. So you subtract those costs out, and that gets your gross profit. So what's left over after you pay for paint and painter labor? And so gross profit on average is 40% for painting businesses. So If you have a project for $10,000, on average, folks are spending about $6,000 to buy the paint and pay their painters, and what's left over is around $4,000 on average. And so, usually, when folks are coming to me for the first time, they're usually average, but oftentimes below average as well. And so, what we dig into is to say, okay, why is gross profit lower than it needs to be? So this is usually a couple things. It's usually a pricing issue where they're not charging enough money to cover their costs, or it could be a compensation issue where they're paying their team too much money. And so we'll walk through their pricing strategy and see how are they arriving at the price to provide to their customer. And then we'll also dig into their compensate how do they compensate their team, their painters. And so once we walk through that, we usually identify, okay, that's why your gross profit is low, because you're not marking up materials high enough or labor high enough or whatever it is, where you're overcompensating your subcontractors. And then that's the number one thing. Is usually it's pricing, maybe it's compensating team. And then once we solve the gross profit issue, then we move on to customer acquisition costs, which are basically your marketing and your sales. So there's a ratio of gross profit to customer acquisition costs that we like to recommend, which is a 3-to-1 ratio. So if you have let's just take an example. Let's say your gross profit's at 45% above average, which is, pretty decent gross profit. Now, since that's good to go, we take a look at your customer acquisition costs. We would want your customer acquisition costs to be 15%. And customer acquisition costs, like I said, is your sales and your marketing. So this would be if you're doing Facebook ads or direct mail, that's all those costs associated with getting leads. And then the sales piece is how much you're paying your salesperson to close the work, or your setters and your salespeople to close the work. Now, oftentimes, folks listening might be the salesperson still, which is completely fine. As a rough ballpark, we usually painting businesses are compensating their salesperson about 8% of what they close. So the work that they sell, they get about 8% of that revenue. So if you can use that as a plug number, if you're still the salesperson. So if your gross profit's at 45%, your customer acquisition cost should be at 15% or lower as a percentage of revenue to have that 3-to-1 ratio. So that's another big number. Gross profit, then that ratio of gross profit to customer acquisition costs. If you have those two things dialed in, then your net profit is usually pretty good. If not, then you might want to look at some of the other costs you have going on with your overhead costs. And then from there, we start looking at that, because that's all profitability. Then we look at liquidity, which is your ability to pay off debt in the short term. So basically cash. Do you have enough cash on hand? Can you pay off your credit cards, your vendor accounts with Sherwin-Williams, that sort of thing? And there's different things you can do to improve your cash flow. Because the cash flow game is all about timing. It's a timing game. And it reminds me of this back in, I think it was like 2000, Jeff Bezos was on the show with Jay Leno, like one of those late night shows. And Jay Leno was just making fun of Jeff Bezos. And this was before Jeff Bezos was like a super buff dude. He was like a skinny,
back
like
when he was a
nerdy,
nerd.
yeah,
Yeah.
skinny, nerdy guy like me now, basically. And Jay Leno was just, you know, ridiculing him in front of everybody. Like, Amazon, you guys are losing millions of dollars every year. How are you guys still in business? And so the way that Jeff Bezos was able to stay in business, even though they were running millions of dollars in negative profit for years, was because he was a master at cash flow. And all he did was basically get paid faster. Because if you go to Amazon, you have to pay for whatever you're buying right then and there, right? You put if you go on Amazon right now and buy some socks, you have to pay in full for the socks, and then they'll send them to you. So he's getting his money fast. He's getting paid fast. And then on the other side, he had really good terms with his vendors, and he wouldn't have to pay them for 30 days later. So he was getting paid fast, and then he was paying others slowly. So that's the whole game with cash flow, is to get paid fast and pay others as slow as possible. So this goes into like deposits, taking a down payment once you close the work. Trying to get a 50% down payment would be amazing, because you get that money in really quickly, and that will allow you to run payroll for your team, or pay down whatever. um and then on the other side of things is you want to slow payments down to others. So this comes into using a credit line with Sherwin-Williams, for example. So you don't have to pay for your materials right then and there in cash. You can actually put it on credit with your Sherwin-Williams vendor, and that buys you 30 days interest free cash. So you're slowing that payment down. And just a pro tip, if you want to extend it even longer, you could use a credit card, a business credit card, to pay down your Sherwin-Williams balance for another 30 days. So that's going to buy you 60 days interest free, of money there. So that's the whole game with cash flow. Get paid fast and slow down payments to others. So we take a look at cash flow. If it's bad, we try to implement some of those strategies I just mentioned. And then lastly is solvency. So solvency is your ability to pay debt off in the long term. And this is looking at how much long-term debt. Usually painting businesses shouldn't have a ton of long-term debt. You might have some vehicles that you have to run the business. But just making sure you have a decent amount of equity, which is equity in your business's assets minus liabilities equals equity. You want to have a lot of equity, because that means your business is very valuable. So you want to keep your long-term debt as low as possible, not as low as possible, but you want to have it like a 50-50 ratio between equity and long-term debt. And so this is usually solved by just increasing your profitability and keeping your cash flow high. Usually solvency will resolve itself. If not, we'll come up with some strategies to knock down that debt. So
Okay.
that's kind of an overview of what we look at when folks first come to us.
Okay. So I think you just dropped a ton of value here. So is it okay? I kind of want to go over a couple of things that you said, just kind of hammer them home a little bit. For some
Yep.
people that might be like listening to this podcast on the road, they're like, "Whoa, that was a lot of numbers." You're like, "I'm driving
Yeah.
right now." Okay.
Yeah.
So the first one I wanted to talk about was gross profit. I feel like a lot of people either aren't charging what they're worth, or they don't feel like they can charge what they're worth, and they're a little upset because they're trying to run a legitimate business here. They have employees, they're paying them above the table, they're paying their taxes, paying insurance, they're trying to do the right thing. But then there's the guy down the street who doesn't have insurance, is not, doesn't have a license, doesn't have any of that stuff. So he's coming in at, half the price of what they are. So, it makes it really hard to close some jobs when some homeowners, maybe they don't see the value, or maybe the value wasn't portrayed to them. Like, do you see a lot of people in that situation? And if so, like, how do you guys handle that from, the very first thing, which is price?
Yes. So it's easy to say, oh, okay, you need to raise your prices, and that's going to
Yeah.
solve your issues. And then people are like, yeah, of course.
Yeah.
But I can't compete with all these guys that, like you said, are just fly by night painters who have no insurance. They're not paying their team appropriately legally, and so they're doing it at a fraction of the cost that I can. Quote. I'm trying to do things the right way. So yeah, completely understandable. And it reminds me, I went and visited uh, Jason Phillips out of Texas. Uh, he's doing around like 12 million in revenue as a painting
Mhm.
business every
Yep.
year, and they, I think he has about a 65% gross profit margin, which is just like crazy high. It's like top 1% of painting businesses. It's like such a high gross profit, and 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 obviously they're doing everything the correct way. Like they have an office, they're paying their team above board. Everything is, completely legal and legit. And the reason why they're able to do this, have such a high gross profit, I mean, 65% gross profit is so high. So they're charging premium rates. The reason why they're able to do this is because uh, they have a very strong sales process. So they communicate the value of why folks should sign up for that for their services.
Mhm.
Um, and from the time that from their marketing, when folks in their area in Texas see their marketing, whether it's online or physically in real life, that value is being communicated through their marketing, and then it continues through their sales process. When the person comes to their house, they're very professionally dressed, they have a professional van, they have a professional sales presentation, and the people that are their customers have the ways and the means, they have the money to spend for a premium product,
Mhm.
and they're expecting that premium product, so they're spending that extra money. They don't want to hire the fly by night painters to paint their home,
Yeah.
because they have a higher standard, and they want it done right. They don't want to have to worry about it. So that's why they hire Jason's Phillips company. So that's you basically, I think pricing is almost like a mind shift change, where I think a lot of folks get caught into the trap of thinking, like mirror imaging bias. Basically, I wouldn't pay $10,000 for a paint, this paint job, so I can't charge them $10,000 for this,
Mhm.
um, because I wouldn't pay for that. But you shouldn't be. You're probably not your ideal customer, right? You're First of all, you're a painter, so of course you might not pay someone $10,000, because you could probably do it for 5,000. Um, but your customers are probably different than you. So you're probably targeting, or you should be targeting, folks that have some extra money. They really want their home taken care of. They don't want to have to worry about it. They want, you know, uh, the crews to be courteous and clean and fully legal, um, and they want to have a great experience. So those are the folks you want to target, and they're willing to pay more money than which you would pay. So that you kind of have to have a different mindset when coming up with your pricing, and you also have to target that right type of client you're going after.
Mhm. Okay. With some of the people that you work with, some of the people that you've seen, how have they sort of made that shift to working in those nicer neighborhoods, to targeting those nicer people? Um, Part of me believes that as you raise your prices, that kind of weeds out the people who aren't the right fit, and then the people who are the right fit will, work with you at your higher prices. They have friends who are also in that situation, that kind of snowball. I guess what are you seeing on your end on how people are making that jump from maybe like, hey, I'm working on like, houses that aren't that nice, I'm not working with people who really have like disposable income here. What do you see on how people are making that shift?
Yeah, so I think oftentimes we're looking at what neighborhoods contain their target client avatar, or whatever you want to
Mhm.
call it. What is their idea? Where are their ideal customer? There's probably certain neighborhoods in their city or their community that have the folks that they want to target, the certain types of homes. And so focusing the marketing side on those
Mhm.
areas can often yield good results. So whether that
Mhm.
is getting tied into the Facebook groups or next door, or doing direct mail every door mailers in that
Yeah.
area. So, really being deliberate about who are you targeting, and, well, first identifying and this is more your domain of expertise than mine probably, but like identifying, who's your ideal client, and then where are they, and then marketing to them in that area.
Mhm. one of the things that we kind of run people through, like on our end when they become a client, is we're super diligent. Okay, what neighborhoods do you want to be working in? And we can just kind of pull a list of zip codes. Okay, do you want to be working in this area, this one? Not a safe area, not a high income area. Okay, no problem. We'll throw that out. And there's a couple options. Usually people at first they tell me, oh yeah, I'll work anywhere. And then as we start to work together, they're like, "Oh, you know what? I changed my mind," and then they want to work in the other areas, which is totally understandable. Um, and then we have like a extended service where we have appointment setting. So like when our leads come in from Facebook, we can also call them and book them and do estimates for you. And then we can filter them by like, hey, if this person's in this zip code, we can just say, hey, sorry, we don't service that area. So we try to do that, that barrier as well. But I think one of the things that we do to sort of present ourselves to that higher market is, you know, creative is really king. We want to make videos, pictures, with the business owner there, something that the people can connect with, a person that they can connect with. Because at the end of the day, people buy from people. They don't buy from a business. They're not going to buy from you because they saw like your logo on an ad. They're going to buy from you because they saw a person or they liked what they heard, or there was sort of a connection there. That's how we tend to go about it. But I'm very curious just to kind of hear how that happened. On the total other side of the spectrum, what you see on that. So yes, this is sort of my domain, but also like you got to be a student of the game.
Right. Right.
Um, so I wanted to kind of talk again about, well, not again, but just kind of go down the line here. So, all right, let's talk about gross profit. Um, what we usually see and what we usually recommend is that if someone's advertising for the very, very first time, they're just starting to launch ads like on Facebook and Instagram and stuff like that. I would prefer that they were at about a 5% to 10% of revenue mark for advertising. Unfortunately, like if it's like the very first week, very first month, you're probably not going to be there. It takes a little while to kind of heat up. Usually, but that's kind of where we like to see people see on a marketing side. So if you make $100,000 off of your ads, you should have probably spent about $10,000 to get that. Is that kind of jive with what you see on your end as well?
Yeah. Yeah. So what we recommend is we kind of look at it from the gross profit to customer acquisition cost ratio, which aligns with what you just said, but just to break it down, because sometimes, um, if you have a really high gross profit, which is a great problem to have, but if you might have more money to spend on marketing, if you can, like I use Jason Phillips as an example. Um, he has a 65% gross profit, so he can probably spend a lot more on marketing than someone that has a 50% or 45 or 40% gross profit, or
Yeah.
gross profit. So, if you're just to use easy numbers, a 45% gross profit, that means we have 15% for customer acquisition, which is again marketing and sales costs. So, and that gives us a 3-to-1 ratio. So 45 divided by 3 is 15. All right. So 15% for customer acquisition. Usually for customer acquisition costs, it's about half and half for marketing and sales. Not always, but so that would mean, you'd have about 7.5% for marketing and about 7.5% for your sales team. And so that aligns with what you just said with 5 to 10% for marketing costs. But if you get your gross profit up to 50%, you'll have a little bit more to spend on marketing. Mm-hmm. So, when folks come to us and they have like a 35% gross profit, you divide that by 3, which I can't do public math. So I'd have to use so was it 35?
Well, yeah, 35 divided by 3, was that like 11.5 or something?
Yeah, 11.6. So that's not very much for customer acquisition.
Yeah.
It's possible to get that, but you have a very tight budget. So it's best to try to get your gross profit up first, so that over 40%, so that you have before you try to really scale, right? Because you know, if you got to fix that gross profit before you start dumping a bunch of money into to marketing. Otherwise, you're just going to have a huge unprofitable business, which is not,
Yes.
you take on a bunch of debt, and that's not going to be good.
Yeah.
Um, so that's why we use that ratio of gross profit to customer acquisition cost, um, to really see, okay, what's going to make sense for this specific business based off what their gross profit is, and is it the right time? Do they have that 3-to-1 ratio? Is it once you get that 3-to-1 ratio, you should be able to just dump money into your marketing, and then it's like printing money.
Yeah.
You can, uh, so get tied in with a great marketing company and just put a bunch of money behind ad spend if you have that 3-to-1 ratio. And as long as you're maintaining that ratio of 3-to-1 for gross profit to customer acquisition costs, you should be golden in most cases.
So I think that's something that I want to kind of stress too as well. Now I'm no expert here like Daniel is, but I did work at a CPA firm. I was an accountant for a while. I did study accounting, so I'm nowhere near where he is. But I do think it's and I fall victim to this too in our agency. Um, Cash flow is like you are going to die if you don't have it. Um, and one thing I really want to stress here is like make sure that you are not putting yourself in a dangerous cash flow situation because it's very easy for that to creep up on you fast. If you, for example, are not collecting deposits, let's say you're running 3 jobs. Each job is about $10,000. You're not collecting any deposits. One customer, you finish, they just don't pay you. You have an issue collecting payment. That's a huge issue right there. Number one, maybe there's something that happens at the job. Uh, you guys damage it, or there's whatever, something happens and you lose some profitability on that job. Maybe one of your guys makes a mistake or something like that. And then job number three, that's fine. If you are in a tough cash flow spot, it's very easy for you to go down $15,000 from pretty much just like that if a couple mistakes happen in a row. um I have fell victim to that in the past where back in my earlier days when I wasn't managing cash flow as well and I wasn't as diligent about my bookkeeping. I thought I knew where my money was going, but I really, when I actually wrote it down, I was surprised when I did my own P&L. So what are, I know you kind of talked about it a little bit, but I was just kind of hoping that we could dive a little deeper into some of those strategies that actually, kind of bulletproof your cash flow. Obviously, deposits is a big one. Can you kind of walk us through a couple of those good things to make sure that you are not in a bad situation where, 3 bad things happen at once, your truck breaks down, people aren't paying you and, you lose money on a job and then you're scrambling here. Like, how do we make sure that that doesn't happen?
Yeah, absolutely. So first of all, if you are a residential painting company, you should not have issues with cash flow. So if you are looking at your bank account right now, you're doing residential repaint and you're really struggling with cash, there's something really wrong with the structure of your business. Now, if you work with a lot of general contractors, a lot of GCs, that's a different story. That's a hard cash flow business. And so it's almost expected that you're going to have cash flow issues. Now there's ways to get around it, but for residential repaint, it really should be a very cash flow friendly business. So if you're having cash flow issues, that should be a red flag. So the first thing you got to look at is your profitability, which we talked about. That's often the problem is you're just not charging enough money or you're just overcompensating your team. So that would be the first thing you look at. If your profitability, let's say you're looking at your profit and loss and your profitability is good, which we can talk about some numbers on what good means. But let's just say that you looked at it and it looks good. Then you would want to look at the timing piece, the cash flow timing. Money coming in, like you said, taking down payments, and then money going out. Paying others. So a lot of folks are either scared to take, not scared, but they feel like taking a down payment will impact their sales close rate, or folks won't want to pay them a deposit. And I've been recommending this for going on 9 years now, I haven't had, when I recommend to take a higher deposit, no one's come back and said I tried to, but my sales just plummeted and I couldn't I had to go back to taking no deposit. I've never had anybody come back and say that to me. And I've recommended this for years and years. So I think at least the homeowners you should be targeting are expecting to pay a down payment to get on the schedule. So you should, obviously you're going to have those one or two people that are weird or whatever, but for the vast majority of homeowners, they will be expecting to pay a down payment to get on the schedule. Now, in certain states, you do have some limitations on what you can take as a down payment. So in California, you're limited to 10% or $1,000, whichever is less. And then Massachusetts, I think, is the other one. You can only take up to a 33% down payment as a contractor. But obviously abide by the law, but take the maximum you can legally. A lot of folks we work with are taking 50% down if they're not in one of those states I mentioned. If you're in one of those states, then take what you can, the maximum you can legally, and then maybe do a progress payment when the job starts. Take another payment, a second payment when the job starts, like maybe 33% or 40%, and then again take the final payment at the end of the job. So most folks are doing. A lot of the folks I work with are doing 50% down, 50% on completion. So that one thing, if you're struggling with cash flow and your profitability is okay, that one change can completely change your cash flow situation, which seems maybe weird or whatever, but just getting paid a few days quicker, and not to mention weeks or months, can really drastically improve your cash flow, because it could be the difference between you making payroll and not being able to make payroll. So that's taking a down payment cannot be understated. And then the other things would be, we talked about putting materials on credit. That's a big one, to get 30 days or 60 days interest free for your materials. Other thing that you could look at, this would be one of the things, one of the last things I would look at, but look at the frequency at which you pay your team. A lot of folks, obviously your team would, your employees or your subcontractors, if it was up to them, they would want to get paid after every hour that they worked. That's the, but you can't do that as a business owner. And a lot of folks will do weekly or sometimes even daily. And I would definitely encourage you not to do daily, at least do weekly. But if you can, even do bi-weekly or every other week. And the reason why is because that time that you're not paying payroll gives you more time to get paid from your customers. So that will improve your cash flow by, again, delaying cash going out. So if you're just getting started with payroll, for example, I would err towards doing it less frequently than, as opposed to weekly. Try to do it, every other week or twice a month. And obviously your employees might not be super thrilled with that, but the way you got to frame it is like, hey, in order for us all to make money, the business has to stay in business. So This is going to be helpful for the cash flow to make sure that we can continue, so you can continue to have a job going into the future.
Yeah. Okay. So once, somebody gets to a point where maybe they're doing their books on their own, maybe they hire you. Hopefully they do, because I'm sure you guys do a great job. Once they're at that point where, hey, I got my first balance sheet, my first profit and loss statement. What do you recommend? How do we analyze this? What are we looking for? And how do we actually use this information to get better?
Yep. So the first thing we would want to look at is your profit and loss. That's the biggest thing, that your profit and loss tells you how profitable you are. And so first we want to look at gross profit. So 40% or higher is 40% is average, but we would ideally are recommending 45 or 50% for most folks. And then the other piece is the other big number would be your net profit, which is what is left over after paying for all business expenses. Um, and so net profit should be around 15%. Now, a similar number, but not is a little bit different, is called discretionary earnings. Discretionary earnings is a fancy accounting person speak for cash flow to owner, money going to the owner. So this is dependent on what roles the painting business owner is playing in their business. So if they are they're the business owner, number one. So the business owner, if they are completely passive in the business, if they're sitting on the beach sipping Corona while their painting business is working for them and making them money, the business should be hitting 15% in net profit. If they're completely passive, that's the ideal situation. Now, most folks listening are probably not passive, so you're probably doing something in your painting business. A lot of times they're the salesperson. So we mentioned this before. A salesperson should get paid 8% of revenue or 8% of what they close. So if you're the business owner and the salesperson, that's 15% plus the 8%. So you should be getting 23% in discretionary earnings or cash flow to owner to you. And this could be net profit or a combination of net profit and an officer salary if you have to run payroll since you're an S corp, for example.
Mhm.
So, and then another role that's common that painting business owners have is a production manager. Like they're managing the production of the crews, and so maybe usually that's somewhere around 5% or so for a production manager. And so we would add that on. That 23 plus 5 is 28% discretionary earnings. And then maybe they're also the office manager. Maybe they're managing the CRM, sending off invoices, answering emails. If you're also the office admin, you should be getting around 4%, 3 to 4% of revenue. And so we add that on, and so that gets us to say 31% discretionary earning is what your target should be. And then maybe you're still working on the job site. And so this can get a little bit tricky, but if you're doing all the job site labor, 35 to 40% of revenue should be going to you. So if you were all the roles I said, business owner, salesperson, production manager, office manager, and you're doing all the painting, you should be getting that 31 plus the 35%. So that's 66% of revenue going to you as the owner with wearing all those different hats. So those are some numbers to look at. Now, these are helpful to know because as you grow, maybe you start out and you're doing everything, right? You're painting, you're doing the sales, you're doing the production management, you're doing the office management. But as you grow, you'll need to hire for those roles. So now okay, this is where what I should be paying this person, this crew, about 35% of what they produce. So now you know that. Now when you bring on that office manager, I should be paying them around 3 to 4% of overall revenue. And so you can take that hat off, put the hat on that new office manager and pay them around that amount. And then you hire a production manager and you can take that hat off of you, put it on them and pay them around 5% of what they produce, etc. So knowing kind of those rough benchmarks is helpful to know how much you should be making in your business, but also how should you compensate those key players as you grow.
Okay, that makes total sense here. All right, so what would you kind of say to somebody who let's throw an example here. Um, someone listening, maybe they're running a painting business. They're starting to grow. They're at about like the $250,000 revenue per year. They started hiring on a couple people. They got their CRM, they got drip jobs, they got they're kind of developing their system in place, and they really want to start taking their books seriously. But they really haven't done much in the past. How does somebody in that situation that wants to kind of take it to the next level? How do they get started? What do they do?
So I would say it depends on if you want this to be taken care of, if you want it to be taken off your plate and not because most painting business owners I run into don't have a strong accounting acumen, and wouldn't expect that to be the case. Um, so if you want it completely off of your plate, I would look for a bookkeeper to because bookkeeping can be really screwed up, and so you want it done right.
Mhm.
And so that gives you information you can actually use to make decisions in your business. So because it's not only for compliance, obviously you need bookkeeping to do a tax return, but you would ideally be using your bookkeeping to generate those financial reports to help you understand the things that we are just talking about, which is, am I profitable? Am I compensating my team appropriately? It should be helping you answer those questions so you can decide how to grow to the next level. So I would look for a good bookkeeper to categorize things appropriately so you can actually make decisions with it. Um, because you have to get bookkeeping for tax purposes. So might as well also have it done in a way that you can actually
Yeah.
use that information as well, and not just, for the IRS to use. Um,
Mhm.
so that's what I would, especially if, because a lot of folks get caught in that, 250, 300, that's kind of a break point where it's hard to get past that point. And
Yeah.
a lot of times it's because they don't know their numbers well enough to understand, okay, your gross profit is really bad and that needs to be improved to here because you're here, or some other thing that's kind of, you know, whatever constraint that's preventing them from to getting to the next level. Um, so that's one thing I would definitely look to do is to get a bookkeeper that's categorizing things to help you make decisions to get to the next level.
Okay. So I think that what you guys do and how how focused you guys are, I think that that's extremely, extremely valuable here. I mean, basically, it somebody in this position kind of has three options. They can either do it themselves, which can be a headache. You can very easily, make a couple mistakes that, I'm sure you run into this a lot. Like one small mistake, translates into a very large discrepancy later down the line. Um, it's very finicky. So I think I would definitely steer people towards the professional route. You're going to spend a lot more time trying to figure it out yourself, and it's very hard to get right if you don't have like the training and stuff. So I would steer people towards that direction. As a business owner, I think it's your job to take this information and actually run with it. Um, and use it to use this good accurate information to make those business decisions down the line. So I would definitely steer people towards that. uh how do you guys how do you use your competitive advantage to be the best at bookkeeping for painters? That the other option that people have is they could hire just a general accounting firm that maybe has a couple painters, maybe not. How does the fact that you guys specialize in painters, how does that separate you and how does that allow you guys to do better work?
Yeah, absolutely. So we help folks know their numbers and what they mean. So we're not just doing compliance bookkeeping just to file a tax return. We're actually helping you understand how you're doing against other painting businesses of the same size. And then what tweaks can you make in your financials to get to the next level? So whether that's pricing, helping you compensate your team better, improving your cash flow, whatever those things are, we actually say like lay it out for you, look at through your financials, make sure they're set up correctly. And so we can analyze them and then analyze them and give you the roadmap on here's what hundreds of other painting businesses have done to get to this next level and plot that out for you. So you have a clarity on what your numbers are and how to improve them. Where if you go to a run of the mill, accounting or bookkeeping shop, they're probably not going to have that insight because they, like you said, they might work with one or two painting businesses, but we literally work with hundreds of painting businesses and have internal benchmarking so we can see what other folks are doing. We know what the top 20% do. We know what the bottom 20% do and everything in between. So we can give you that edge to get better and grow to the next level.
So how does that work exactly? Do you guys have like a monthly meeting? Do you send out reports? Like, how does that all really work?
Yeah. So what we do is, first of all, when you sign up, our whole approach is to give you a return on investment for working with us because we feel like accounting should more than pay for itself. So when you first sign up with us, we'll do an analysis on your tax situation to see what money is we can save you as quick as possible to give you a return on investment for working with us. So we'll look at your last 3 tax returns. We'll pull your IRS tax transcripts and see what tax savings we can employ as soon as possible. And then we get your financials put together, give you that initial financial picture of where you stand today, and start working you towards, okay, here's what you'll need to do to improve your net profit, to make more money. Again, focusing on, we're trying to give you that return on investment, trying to provide you that roadmap so that you're getting that return on investment worth working with us. And then each month, we're going through the financials with you to say, hey, here's how you compare to other painting businesses. Here's how you can improve to get to the next level. And then you're having a quarterly tax planning session with a tax professional to say, okay, here's how much you're going to have to pay in tax so far based off of how well you're doing in your business. And then here are some strategies based off your personal situation, because maybe you have a painting business, but maybe you're also married that has a spouse income, or you have a rental property. We'll take that into a holistic picture and come up with a holistic tax plan to lower your taxes as close to zero as legally possible. So we're doing that with you quarterly throughout the year, so that you're saving as much money on taxes as possible.
Awesome. That is kind of one of the things that we didn't dive into as much is the taxes. I think that, you know, uh, some people may be using a bookkeeper and a tax person. However, if that's done in the same shop, if that's both done under the same roof, then everybody, understands, it all works together. And I think that it can be done a little bit better just to make sure that everybody's on the same page. Do you notice some people kind of in that situation, or how that benefits them?
Yeah, having it just makes things a little bit more efficient. We having it one team take care of both. We have a uh, accounting department, which basically takes care of the bookkeeping and the tax prep. And then we have an advising department takes care of the advising, the tax planning, financial analysis. And they coordinate together to make sure that you're compliant, but also you have an understanding of your numbers. And so we're doing that coordination for you, instead of having, like, a lot of times when you have a bookkeeper and a tax a tax person, you're having to be the middleman,
Mhm.
between them and coordinate. So it just kind of takes more of your time. We just do that coordination internally, so you don't have to worry about it.
So, let's say I'm listening to the podcast. I'm driving, maybe I'm watching on YouTube. I'm interested. I want to. It's a long time coming. I should have been watching my numbers, and I really want to take it to the next level. So, yeah, and I think cracking this is gonna do that for me, so that I can make better decisions in my painting business. What should I do? What are the kind of the next steps to get involved with you guys?
Absolutely. So if you go to bookkeepingforpainters.com, you can schedule a consultation. If you click on the top right or in the center of the page, schedule a consultation. And from there, you'll speak with a consultant who'll understand your situation, and then we'll get you taken care of, and within 30 days help you understand your numbers and save big in tax.
Is there anything else that you feel like I didn't kind of dive into, or that you wanted to touch on how you guys help? I feel like we kind of got a lot of value on this one here.
Yeah, I mean, um, the thing I would say, just for the tax side, since we didn't talk about it too much, I would just say that a lot of folks think that taxes are just something that happens to them. But what a lot of folks don't realize is they do have a lot of control over how much they pay in taxes. And uh, and so I would just encourage you to get a hold of a tax professional who can guide you through and help you understand what moves can you make, especially this time of year. Not sure when this is going to be released, but the end of the year, there's some big things you can do to save big on taxes at the very end of the year. And just having that knowledge on what you can do can really empower you to save, thousands or tens of thousands of dollars in taxes.
So here's what I'll say, guys, to kind of end this off. If you really want to take your business to the next level, You have to know your numbers. You cannot hit a target if you can't see it. If you don't know what that target is, you'll never make it to 500, $1 million a year if you don't actually know what that looks like on paper and how to get there. I think that this is one of the most valuable things to do and that you can do for your business is knowing your numbers. I'm looking at my whiteboard right now. I have my numbers listed like right out in front of me so that I'm always looking at it. So we know what's going on and like how the business operates. And this is another thing that's going to take you from, being self-employed to being a business owner so that you can, make those bigger decisions, focus more on steering the ship opposed to doing the day-to-day work. We want you working on the business, not working in the business. That's going to make your life a whole lot easier. It's probably going to be a lot more fun too. So I will leave a link below for bookkeeping for painters. Please, please, please make sure to check it out. See if it's the right fit for you. Get on that consultation. It's free. A lot of people, don't think about bookkeeping as the very first thing, but please do it before it's too late and you're in a position where you're like, oh crap, I'm losing a ton of money. How did this happen? Well, you would have known that if you have had bookkeeping. So that's my ask here today. Thank you, Daniel. It was an absolute pleasure. Guys, links below if you want to check them out. I strongly encourage you, if you do not have a bookkeeper already, to make this leap, take to the next level so that you can really understand your business here.
Thanks, Caleb.
Of course. Thank you, everybody, and goodbye.